Hello traders, this is Yasser with Trade Alike. Just wanted to quickly do a quick video on what are my thoughts and what is my process of entering a trade and how I like to stay in a trade. Show some patience, which I have practiced and learned over some time now and have been doing well with the results. So yeah, before we get there, here's a quick look at the new website. Tells you all about what TradeLike is, how it how it has transformed into what it is today. It has all the list of the followers, the senders that you can follow, along with their profiles that you can click on and see the details of the results. And one quick thing that I wanted to highlight was that if you click on this buy credits button, it takes you to this page where you can buy credits from the website. You don't have to buy it from within the app itself. And actually, if you do it from here, you can earn some free credits when you do it from here. Okay, so let's not waste time and get into an example of how I read an SPX alert, how I create that alert, how do I enter that trade, to be specific. So I like to do, I would say I'm a price action trader. I don't have any, this is exactly the chart I look at when I enter a trade. I don't have any indicators like RSI, MACD. I have some moving averages, short-term moving averages, and I like to highlight the support and resistance levels. So this is a 15-minute chart. These candles each represent 15-minute time frame. So I like to stick to that because it gives me, I would say, enough room where a 5-minute chart can be choppy and 15-minute can show some sort of confirmation of a short-term intraday trend. Okay, so let's take a look at let's say Thursday. So we started the day on an up node, we sold off, then we went back up, and then as I did not enter here, I entered the calls right when the 15-minute candle closed above previous day's high. So when the 15-minute candle closed above the Wednesday's high in SPX, that was my signal that okay, the momentum is there. I need to enter calls. So I entered the calls and I immediately closed them towards the end of this candle right here. But then I waited for some time, and this is one of my favorite patterns to play, which is a continuation pattern, a bull flag pattern. So as you can see, as we have this pole in the 15-minute chart, we sold off and then held this level and moved sideways, a little chop. And this 15-minute candle, the third one, started, you could say, making that move towards the upside. It did not quite close above this previous high. And as we moved on to the next 15-minute candle, it sold off a little bit and then it started moving back up. So if I move to a 5-minute chart frame, which I always like to keep as well, I think I have a 5-minute chart saved here. So if I move to a 5-minute chart frame, here is that bull flag. So this 5-minute candle really confirmed that okay, this is the move. But then I entered right here. As you can see, the time is right 11:30, which means that ends the 15-minute candle, and it closed above this previous high. And I entered right there, and we rode the move up all the way to 2707 level, I think. But it went all the way up to 2709 or 2708, 2708.95. So yeah, almost 2709. So I did not held it all the way up here, but I think I closed right here. So that's a good 35% move in calls. That's the thought process that I follow. And as you can see in the 5-minute chart, it held above this short-term moving average. So that's sort of my stop loss point. So if a candle would have closed below this moving average right here, I would have at least trimmed, or if not stopped out, or if not closed the position, at least trimmed my position just to lower my risk. So trading is all about risk management as well. What is your position sizing? If you are opening with $1,000, you better have $30,000-$40,000 in your account. Otherwise, you need to manage your risk properly. Otherwise, you will blow up your account. You don't want that. So and then we enter this whole choppy area. I'll show that to you in a 15-minute chart. If I move too quickly here, so in a 15-minute chart, you can see this was a choppiness. So this means premium burn. That means nobody's making money, neither the puts nor the calls. So better stay away. So, and this over here, red candle broke down. It broke out. It broke down of this choppiness. But then we did not see the follow through. So that means I did not enter any puts here, because for me to enter puts here, I want to see a follow through at least from this big red trend candle. So there was no follow through. It immediately reversed and it went all the way up and closed. Not really towards the high, but it closed right there. And today, I would say happens to everyone. I opened the trade a bit too quick. I would say I wanted to enter the trade when the 15-minute candle closed above this previous day's high, and I entered right here. It did not close above, but I entered it, and it shook me out right here. So I got stopped out, and it went back up. Anyways, even if it went back up, it did not make that good momentum move to the upside. It remained choppy all throughout the day, and then there's this whole choppy area of between 26.97 and 27.08. So if next week I will be looking to enter calls if we start making the move up and above 27.15, or I will look for puts if we start moving moving below 26.95 on a closing basis in a 15-minute chart. Okay, and now let me quickly show you my trading platform. So I always like to have 15-minute and a 5-minute chart with in front of me. So on the left side is a 15-minute, and on the right side is a 5-minute chart. I'll have my lines, as you can see, drawing here and just doing everything. But the same setup that I showed you on the stock charts platform, here's it on the Thinkorswim platform. As this is live. Basically, so that means the candles are forming live. Stock charts you have to refresh every time, but it gives me a clear picture. But this is my, you can say, sort of bread and butter in terms of when it comes to entering a trade. So all I see is, okay, this is this 5-minute candle broke above this bullish flag looking thing, but it still is below in a 15-minute time frame, right? So if I scroll here to in a 15-minute time frame, right here, I'll zoom in. I'm still below, right? So 11:30, right here, it's made that move above the bull flag. 11:30 in a 5-minute time frame is right here. This candle right here. It made the move and closed above that level. That is my entry point for the calls. And as you can see, what happened? That's a good 35-40% move in the calls, right? If you held that level, and you just let the short-term moving averages guide you where it's going, and then we enter the choppy phase here. So here's my week's performance, 2 weeks performance, playing all those contracts, 1 to 4 contracts, of course, depending on the price. If it's $1.50, I would like not to open more than 2 to 3 contracts. That's the risk I'm comfortable with. Of course, to some people it's not that many dollars, but it makes up a good, nice looking week. Yes, you'll have losses, but that's part of the game. You get stopped out. Nobody likes that, but it is there. It will happen to you. You just have to manage those. And in the end, after a week's worth of accumulation, profits add up. I mean, if you're playing it correctly, if you are following your process, if you are being patient with your trades, these things add up. So just wanted to quickly highlight that. That helped me, and I hope to help you guys become better traders by giving you those alerts and letting you just learn from those trades as well. You can see my commentary is pretty much with charts. I like to sometimes enter commentary around how many contracts I opened with. So all those kind of things. All right. I hope you guys have a good weekend and see you next week. Thank you.